thanks so much for joining us. Glad you could take the time. Let me ask you about the transparency, because it's become almost a non-story in as much as the Fed can. We've known they're going to do this for so long, and they have. It's only the numbers now that make the difference.
Well, you know, things have evolved a lot over the years that I've been associated with the Fed, Matt. Back when I first started in 1970, I think the Fed actually thought that a lack of transparency and secrecy was a good way to maybe surprise markets and the general public, and in that way have a bigger effect. I do disagree
like the transparency.
with it.
Why?
I like it. Well, I like it because I think if people have, I mean, obviously there can always be surprises, and the Fed may have to react to that. But to the extent that certainly the markets and the general public have a clear sense of where the Fed is headed, what it's trying to accomplish, that takes a lot of uncertainty, in my view, needless uncertainty and risk out of the picture, and that's what's happening here. So yeah, certainly this is transparent. Beg pardon?
Is it able with this kind of transparency, I mean, telegraphing a week, 2 weeks, a month ahead, or even months ahead what it's going to do, is it able to really nudge markets in directions it wants to? Can it, for example, encourage consumer lending with this kind of transparency?
I'm not sure that it really does anything to stimulate that kind of activity. I think that the key point is that if people, decision makers in the private sector of the economy, know what the Fed is doing, then they can make their decisions more intelligently because they have hopefully a better understanding of the environment that they're going to be in. I think most people in the situation know that if circumstances change, the Fed may have to change. So these things are not locked in. You know, they have now said they intend and expect to have the funds rate at its current very low level for another 2 years. But I hope that everyone recognizes that if conditions change, the Fed may have to shorten that period. But to the extent that we share the information we have, I think my own view is that makes for better decisions and a more stable economy and a better outlook.
Al, let me ask you, Neil Grossman, he's been a guest on Street Smart with Matt and myself, kind of writing in and talking about, whether or not we might see some coordination by central banks around the world. Would something like that, a coordinated central bank policy, as difficult as that may be a smart move right now and help the global economy have more of an impact?
I just think my own view, Carol, would be that that's very difficult to do. It sounds like it might be a good idea in some circumstances, and certainly there is a degree of certainly information sharing and to some degree actually execution coordination among central banks from time to time. But if you think about Europe now, they have one set of circumstances and we have another. Neither picture is particularly bright, but they're very different. And I think it's important in an economy as large as the U.S. that everyone understands that the U.S.'s prime principal target is the U.S. economy. Certainly we take account of what's happening in Europe and elsewhere, but the real focus has to be here at home.
Al, got 30 seconds. What's more significant, that the Fed said that they see significant downside risks to the economic outlook, or that there were once again 3 dissenters?
Well, I think I was a little surprised, frankly, by that the 3 dissents continued, but I do think that the language about significant downside risk is important. Carol, I would mention one other sentence that gets little attention, and it's the one, I guess, at the end of the first paragraph about inflation expectations. That's the Fed's signal about whether they should begin to be worried about inflation on the one hand, or in the current situation, perhaps a drift back towards a deflation, a deflation risk. And they didn't do that. They left it where it is. They said inflation expectations still stable. I think that explains a lot about why they did not apparently consider a QE 3.
All right.
So that's where you are now, I think.
All right. Hey, Al, thanks so much for joining us. Al Broaddus there, former Richmond Fed president.